Blue. The company being analyzed today is Skipper Limited. This is a company which manufactures telecom towers, power transmission towers, and much more. Today, we're going to analyze the company's financials, what the company actually does, and its historical financials. So, let us start. First, we have a market capitalization of 4,367 crores. So, not the biggest company, not the smallest company, mid capish. Current price of one share is 387 rupees, price to earnings of 23.8 times, and a book value per share of 112 rupees. Book value, assets minus liabilities of company. Then let's go to the historical finances of the company. All of these numbers are in millions of rupees. Let us first start with revenue. So, revenue from fiscal year 22 to fiscal year 25, 39% CAGR growth in revenue. So you can see fast growth. It rose from 17,070 million rupees or 1,707 crores in fiscal year 2022 all the way to 4,624.4 crores in fiscal year 25. Then EBITDA also rising at a 39% CAGR from 167.8 crores in fiscal year 22 to 451 crores in fiscal year 25. Here you can see the EBITDA margin. See, it was 9.8, 9.7. So that kind of EBITDA margin company, not the highest margin company, not the highest margin. And profit after tax grew at a 81% CAGR, 81% CAGR in this time period from 25.1 crores in fiscal year 2022 to 149.3 crores in fiscal year 2025. And of course, the profit after tax margin also rising from 1.4% to eventually 3.2% in fiscal year 2025. Then the net working capital days, excluding creditor acceptances, lower this metric, the way better it is for cash flows. Okay, so big decline, substantial decline in net working capital days, so way better for cash flows. Then leverage ratios. Let's first focus on this blue line, debt to EBITDA, declining from 3.38 times in fiscal year 22 to 1.55 times in fiscal year 25. So big decline in debt to EBITDA. That's actually good. That's a good thing. Debt to equity also declining from 0.77 times to 0.50 times. So that's also very good. That's a good thing. So on leverage side, things according to these metrics seems to be getting better. In performance ratios, ROCE, return on capital employed, rising from 9.2% fiscal year 22 to 21.71% in fiscal year 25. That is a substantial improvement, very substantial improvement. Return on equity also rising from 3.4% in fiscal year 22 to 12.5% in fiscal year 25. That is not the best ROE, to be honest, but good improvement. That's a great improvement. Then cash flows. These numbers are in crores. Focus on cash from operating activity. Here, there's not an upward trend, but at least they're positive. Fiscal year 2020, 214 crores of operating cash flow. Fiscal year 25, 153 crores of operating cash flow, but at least it's positive. Not an upward trend, to be honest, but it's positive. Now, what does a company actually do? So, we manufacture a range of power transmission structures, telecom towers, and railway electrification structures. So there seems to be three business segments of the company. First is engineering, which is the biggest one. You can pay attention to this. Okay, the green, these things, green one, these are the net sales of the companies in different time periods. So engineering is the biggest one. The infrastructure segment is the second largest one, and this one, polymer pipes and fittings is the third largest one. Okay, the third segment. The first is engineering segment. 3.75 lakh tons per annum is the engineering production capacity as of September 25. Here they make fasteners and tower accessories. They can make complete telecom towers, test stations, railway structures, power transmission towers, monopoles used in electricity, power distribution poles, MS and high tensile angles. Then you have the infrastructure segment. So, from what I understand, the infrastructure segment includes, for example, it said here telecom EPC. From my understanding, let's say in engineering, they will make a telecom tower. In telecom EPC, they will not only make the telecom tower, but they will install and commission that telecom tower for the client. So, EPC involves that also. The infrastructure segment, it includes tower substation, coatings, water EPC, telecom EPC. Coatings, I believe, coating products with like layer of metals, like paints, stuff like that. So coating something with something. And one insight we get from here is the company can cater to, first of all, telecom, then power, then of course water also. Infrastructure segment. Okay, and first pay attention to revenue also. So in fiscal year 25, this one produced 35,185 million rupees, or 3,500 crore rupees from engineering, but only 674 crores from infrastructure. And look at the difference in the EBITDA margins also. 11.2% EBITDA margin, 5.9%. So engineering is the biggest one, and it's also the more profitable one, and 26% revenue export revenue share was from the first half of fiscal year 2025. It's written here. So there is export revenue coming. The largest segment has export revenue coming, and therefore, and this is the infrastructure segment focusing on high margin transmission project. Now comes the third one, leading manufacturer of polymer pipes and fittings, catering to both plumbing and agricultural sectors with expanding reach and strengthening market share. So now we have power, then we have water, then we have telecom. Now we also have infrastructure segment, sorry, plumbing segment and agricultural sector. So they're catering to different sectors. Some of the products are CPVC pipes, UPVC pipes. We got fittings, we got water storage tanks, we got agricultural pipes, 62,000 tons per annum. Polymer capacity fiscal year 25. And you can see the revenue 431.7 crores of net sales fiscal year 25 with only a 4.3% EBITDA margin. So, okay, engineering is still the biggest. And the company is one of the largest manufacturers of polymer pipes and fitting products in West Bengal and East India. Okay, so East India focus for polymer pipes and fittings. Then manufacturing capacity. So the blue star one is engineering capacity, the green one is polymer pipes and fittings capacity. So all these are in Kolkata, and Assam. Again, East India focus. Okay, 262,000 tons per annum plus 75,000 tons per annum plus 38,000 tons per annum. You plus them all up, you get the entire engineering products capacity, which we already saw was mentioned in the earlier segment for like engineering. Then polymer pipes and fittings, 55,000 tons per annum plus 7,000 tons per annum. Okay, we got the where the facilities were and all of that. Now comes the order book. Current orders from customers the company has right now. Okay, order book 90,093 million rupees or 9,009 crores of order book as of December 2025 compared to December 2024, up 42%. Then in quarter 3 fiscal year 2026 alone, the company got 1,428.6 crores of orders. Okay, new orders. And in the first 9 months, fiscal year 26, it got 4,649 crores of orders. You can see the order book has shown a 47% CAGR from March 2022 onwards, and 90% is from domestic, 10% export, and power trading and distribution, sorry, transmission and distribution accounts for 78%, export 10%, and non TND, which is, I believe, I'm forgetting, transmission and distribution, domestic. So domestic, which is not there, 12%. So you can see the power one is pretty big. And you can see here the non-TND product includes telecom, railway, solar, even solar, water EPC, and other steel structural fittings. Okay, so you can see power transmission and distribution is massive for the company. It is the main focus. Okay, it is the main focus. Then look at this market leadership. It is India's largest and one of the top 10 globally integrated transmission and trading tower structure manufacturers. So, tower structure for power transmission and distribution manufacturer in India, the largest, they're claiming to be integrated, though. Keyword integrated and top 10 globally. So, at least it's big in the segment it claims. Then, first Indian company to design and supply transmission monopoles to North America. Okay. Low cost T&D player in India with the highest EBITDA margin among peers. So the company says because of its backward integration and its forward integration, it has the best EBITDA margin in the game. That's a good thing. And company's market leadership, So they're claiming market leadership and order book to revenue ratio of 2.91 times on fiscal year 2025 revenue, showcasing long term revenue visibility. So order book is way above their revenue as of now. Then segment report. So engineering products contributed 80% of revenue as of the first 9 months of fiscal year 2026 revenue. Infrastructure 11%, polymers 9%, and even under engineering, the power, transmission, and of course distribution is very important. Strong global presence. They're exporting 50 countries, 250 countries plus 21% is the export contribution to the first 9 months of fiscal year 26, talking about engineering segment only. Okay, so engineering segment got 21% of its revenue from exports in the first 9 months of fiscal year 26. 24.5% CAGR growth is the export revenue growth for fiscal year 2022 to fiscal year 25 time frame, and 857.1 crores is the share of exports in the order book item, sorry, as of now. And here you can see Africa, South America, Middle East, North America, Oceania, Europe, and South and Southeast Asia. So quite a lot of places it is actually exporting to. Then performance guidance. Okay. So fiscal year 26, we're targeting 20% growth year on year, driven by strong execution momentum across ongoing projects and delivery efficiencies. So at least 20% growth. That's a pretty good growth rate, you know. Then capacity expansion. Enhancing the engineering capacity. They're adding another 75,000 tons to reach a total capacity of 4.5 lakh metric tons per annum by the end of this financial year, strengthening ability to meet growing demand. They're adding a lot of more capacity, 75,000 tons. Then targeted capex. They have a planned capex of approximately 250 crores towards its expansion, funded to a balanced mix of internal accruals and debt to drive sustainable growth. Okay, so 250 crores of investments, capex, capital expenditure for this 75,000 tons per annum of expansion, and they're going to fund this using debt plus internal money. So, like cash flows and all of that. I guess not equity. They're not raising any more equity or issuing any more shares. Now, conference call analysis. Here we have some statements by the management giving us more insights into the company. So the company's management is saying this, okay? So first, we continue to see strong traction across both domestic and international markets, supported by a robust bidding line of approximately $3 billion or over 27,000 crores. So there were projects they are currently bidding for, or projects they're about to bid for in the near future. That amount is 27,000 crores or $3 billion plus. So they are bidding for quite a lot of projects. Then so yes, again, our aspiration is obviously to grow between 20 to 25%. We maintain that yes, the opportunity in transmission does present itself for us to be making that target. So between 20 to 25% is an aspiration for year on year growth. So it seems that at least in the near term, maybe let's say next 2 years, we can say that 2, 3 years, I'm again only guessing, but they're saying they want to grow 20 to 25%. And they believe that the opportunity in transmission itself presents them with the chance to make that target a possibility. So, huge bidding pipeline, and of course, they want to grow 20 to 25%. Then, yes, normal. On average, our orders are to be executed over a 2 year time frame. So, of course, certain orders are shorter term in nature, where 1 to 1.5 years, and certain orders are longer term, but on average, you can assume them to be executable over 2 years. So the order book, they assume that to be executed over the next 2 years. Then copper is not a raw material, so we are not affected. The major raw materials are steel and zinc, and to some extent aluminium. Okay, so copper is not a raw material for them. The raw materials are steel, zinc, and to a smaller extent aluminium. Okay, steel and zinc, aluminium. Then the new capacity, 25,000 tons of capacity, they're expecting to commission by the end of this fiscal year. So by March 2026, they hope that, like, it's March 2026, 31st March 2026, boom, they commission that capacity. It's expected to start generating, start operating after that period, okay, after that date. Now, generally, our optimum utilization is in the range of 85 to 90%, which is the optimum utilization. So we should achieve that by quarter two. So at quarter two of fiscal year 2027, which I believe is like September 2027 end, they no, sorry, September 2026. Yes, yes, September 2026 end, they believe they should achieve the capacity utilization of 85 to 90%, which is the optimum one, even with the added one, okay? The new capacity. You add that and they achieve 85 to 90% in that added capacity by quarter two of fiscal year 2027 or September 2026. Then, so, if you look at in terms of export execution, even in a 9 month period, we have had close to a 20% execution rate for the export out of our engineering products. Now, obviously, the long term aspiration is to go to 50%, and we certainly think that is possible with the kind of opportunities that exist. Okay, in the very, very long term, they want to have exports contributing to 50% of revenue. Okay, I believe in the engineering segment, currently it's contributing around 20% of revenue in engineering products. So they, in a very long term, they want that to go to 50%, I believe, in the engineering segment. Then margin guidance. So any guidance for like profit margins, I think we are able to maintain that 10% plus only. And of course, as you have been noticing, that we have been able to improve margins despite the increase in revenue. We have been able to improve the margin profile over last year, which is what our expectation is a long-term aspiration. We get to 11 to 12% number in this. Okay, 10% plus minimum. And with a long-term expectation, 11 to 12% is the margin they're expecting. So that is it. That is it. Skipper Limited, good growth they're targeting. Let's see how the company does in the future.